Welcome to The Explainer. Today, we're going to demystify the entire life cycle of a sale. We're going to follow the money, basically, from a brand new customer all the way to cash in the bank. We'll turn a super complex technical process into a story that just makes sense.
So, have you ever wondered how a company's sale actually becomes cash in the bank? Yeah, it's a question at the heart of literally every business. And the answer? It's not just one thing. It's a whole journey, really carefully orchestrated. And today we're going to follow that exact path, right from the initial handshake all the way to the final deposit.
So that's what we're going to do. We're following the journey of one single sale to really break down this whole accounts receivable process. Think of it like this. We're taking a super dense technical manual and untangling it, turning it into a story that's easy to follow, hitting all the big milestones as we go.
Okay, so here's the roadmap for our trip. First, the starting line, creating the customer. Then we'll get into making the deal with agreements and orders. After that, it's all about fulfilling the promise, getting the product out the door. Then the bill arrives, which is invoicing. And the best part, closing the loop and getting paid. We'll even cover the unexpected stuff, like handling returns. It's the whole shebang, A to Z.
All right, let's dive right in. First stop, creating your customer. I mean, it makes sense, right? Before you can sell anything, before even $1 changes hands, the system has to know who you're dealing with. This is ground zero. It's the foundation for everything that comes next. And this customer master record, it is so much more than just a name and an address. Seriously, think of it like the DNA for your entire relationship with that customer. It defines everything. Payment terms, like net 10, a credit limit to manage your risk, even the default currency, like USD. You get this record right from the start. And trust me, every single step after this just gets a whole lot smoother.
Okay, so our customer's in the system. Now what? Well, now it's time to actually make a deal. And what's cool is that the system can handle all kinds of deals, from these big long-term contracts all the way down to a simple one-off sale.
Let's start with the big one, the sales agreement. Now, this isn't just a regular order. It's a formal contract. It's where a customer basically says, hey, I promise to buy a certain amount from you over time, and in return, you give them special pricing and better terms. It's all about rewarding that loyalty and locking in future business. Smart, right?
And this is where you see the real flexibility kick in. A commitment doesn't just have to be for, say, 10 units of one thing. It could be a promise to spend $50,000 on a specific product, or maybe $10,000 on a whole category like auto speakers. Or it could be super broad like, I'll spend 10 grand on anything you sell. This lets companies tailor their deals to fit each customer just perfectly.
Okay, so that's the long-term stuff. But what about a simple one-time sale? You know, no big contract needed. Well, that's where a sales quotation comes into play. It's just a straightforward offer for a specific purchase. And here's the best part. The second the customer says yes, bam, one click converts that quote into a live sales order. The whole fulfillment process is officially kicked off, just like that.
All right, the deal is locked in, the order's in the system. Now for the exciting part, the physical journey. We're talking about getting that product off the warehouse shelf and onto the customer's doorstep. This is where the digital stuff we've been doing finally meets the real world.
And the core of making that happen, at least in the system, really just boils down to these three key steps. You confirm the sales order, basically locking it in. Then you post packing slip, which is just system speak for shipping it. And finally, you generate the invoice.
Posting a packing slip. I know, it sounds kind of boring, right? Like just some paperwork. But listen, this step is absolutely critical. In the system, it's a huge deal. That one click is the digital trigger that tells the entire business, hey, the goods are on their way. It automatically updates your inventory numbers, reduces your stock on hand, and officially flips the order status to delivered. It's a big moment.
So the product is delivered, the customer is happy. Now it's our turn to be happy. It's time to get paid. And the invoice, that's the formal, official request for payment. It's the piece of paper, or, email, that turns a successful delivery into something you can collect on, a receivable.
But check this out. Not all invoices are created equal. You've got your standard sales invoice, which is generated right from a sales order for stuff you keep in your warehouse. But then you have this other thing, a free text invoice. This is for everything else. Services, weird one-off charges, anything that isn't tied to your physical inventory. And for a business that sells more than just products, this is a total game changer. It gives you the flexibility to bill for literally anything, even if there was no formal sales order to begin with.
Okay, here we are. This is the finish line, at least for the forward part of our journey. The product's delivered, the bill's been sent, And now, the payment arrives. This is the magic moment, where that accounts receivable on your books turns into actual, real cash in the bank.
And the key word for this step is settlement. It sounds official, and it is. It's the final act in the accounting play. See, you don't just say, hey, we got some money. You have to specifically match that payment to the exact invoice it's meant for. That's settlement, and that's what officially closes the loop and lets you mark that invoice as paid.
But, life isn't always that neat and tidy, is it? So what happens if a customer only pays part of an invoice? No problem. The system handles this seamlessly. If they pay $5,000 on a $9,500 invoice, the system just keeps that remaining $4,500 as an open balance. It tracks exactly what's still owed, down to the penny.
And this is where you see that the system is really built for the real world, because messy stuff happens. A customer overpays, it just creates a credit on their account for next time. They pay early to get a discount, the system can apply that automatically. Someone made a mistake and posted a payment wrong, you can just reverse it, and it cleanly resets the balance. It's all about handling all those little real-world quirks of customer payments.
So, we've made it to the end, right? Payment received. But sometimes the journey takes an unexpected detour. Yep, I'm talking about returns. A customer needs to send something back. And of course, the system has a whole dedicated process for this, called a Return Merchandise Authorization, or you'll hear it called an RMA.
Honestly, the easiest way to think about it is that it's the fulfillment process just running in reverse. First, you create a return order, which is like saying, okay, you're authorized to send it back. Then, when the item actually shows up at your warehouse, you post a product receipt to log it back into inventory. And finally, you generate a credit note, which is the refund for the customer.
And here's another one of those super smart real-world features. There's something called a credit-only disposition code. This lets you give the customer a refund without making them send the product back. I mean, think about it. If it's a cheap item, the cost of shipping it back could be more than the item is even worth. So this feature saves everyone time and money, and it can turn what could be a bad experience for the customer into a really positive one.
So when you look at the whole picture, the biggest takeaway is this. None of these steps are happening in a silo. They're all connected. From that very first moment you create a customer record, all the way through to handling a payment or even a return, it's all one single cohesive story. And a system like this gives you a perfectly clear, traceable path for every single transaction. It gives a business total control and visibility.
And that really brings us to our final thought for today. If we think about this whole accounts receivable process as the journey of a sale, then what does a really smooth, efficient, error-free journey say about a company? It says a lot, right? It's more than just good bookkeeping. It's a direct reflection of how well that company operates. And maybe most importantly, it reflects the quality of the relationship it has with its customers.